All right. Hello, ladies and gentlemen, and welcome to Facebook Live sessions for Portfolio Cashflow, $2,000 on a month-to-month basis with me. I'm Possible Terence, and let's get our session this week started. Yeah. All right. Now, so without further ado, all right, I would like to keep the session short and compressed today. All right, but I do have some important information that I can share with all of you. All right. Why? Because markets are going down. All right. Now, so if you're afraid, all right, of what the market is doing right now, right? If you don't know, right, if you should be placing any trades, or if you don't understand what the market is trying to do right now, right, I will help you, right, to my best ability inside this free Facebook session that I conduct on a week-to-week basis, right? And then we try to build, right, and level up your investment understanding. Now, so if you're joining us over here, just drop a note, say hi, all right, and Pangsin, all right, thank you very much for joining me once again. All right, and for those of you who are joining me for the first time, all right, can you just read the banner on the screen? All right, there is this website called streamyard.com/Facebook. All right, I'd just like you to go to the website, all right, and then you'll see a Facebook banner. All right, click on it so that we can approve your Facebook profile, all right, when you actually leave a comment. All right, now, so when you leave it, I'll actually be able to see it. Yeah, all right, now, and yes, Andy, all right, I'm able to see you this week, all fine. Yeah, all right, okay, hi, Patrick, as well. All right, and we have a Facebook user. All right, I don't know what Facebook is doing or what our live streaming software is doing over here, but if it is you, all right, and you recognize that it's you, can you just go to the banner and the website, all right, and approve your profile once again, okay? Now, hi, Susan, all right, and without further ado, let's get myself started as well. All right, and yes, I removed the banner. And disclaimer before I start the session, all right, that whatever I'm doing over here today, that all forms of investment bears a risk of loss. Right, I'm merely sharing with you my thoughts of how I'll build my portfolio, right? Trades I'm looking at, right? Please take it from an educational perspective, right? This is by no means any form of recommendations at all for you to trade them, right? You should be aware of all the risks involved before deciding to place any of these trades in your own accounts. Okay? Yep. All right. So throughout this Facebook live sessions, which I run, all right, for the public, all right, all I'm trying to do is to put out to all of you that a simple portfolio can actually be achieved and built, all right, if you're looking for better than average returns. All right, now, so we are going into the month 11, all right, of this portfolio cash flow that you're seeing over here, all right, and I'm trying to now, right, hit the target for the 11th month in a row. All right, now, so it's going to be difficult. Conditions have made it difficult for my portfolio right now. All right, but I'll still try, all right, to do as best as I can over here. All right, now, so the portfolio is as you see on the screen, right, for the month of March right now, March monthly expiry, right, I am now only at $840 cash flow, right, so I've still got some way to go because our target, right, our monthly target is actually at $2,000. Yeah, all right, now, so I'm not even halfway there. Yeah, all right, I've got 3 more weeks, all right, to achieve this goal for this month. All right, so will I be able to do it 11 months in a row? All right, will I, all right, finally, all right, end up missing a month? All right, that's all left to be seen. I don't know as well. All right, but let's see what Mr. Market wants to give to me. Yeah. All right, now, but the first thing I'm going to do over here is always to start the session with my market outlook. All right, now, so all of you are seeing right now that I've brought the SPY into the picture. All right, so this represents the S&P 500. Now, so if you see what I'm talking about, and for those of you who have been joining me week after week, all right, we had this breakdown of this range, right? So we had a breakdown of this trading range, all right, and now, all right, we're seeing that swift, severe sell-off, like I said to all of you before, all right? So this was like a double top over here with a divergence, right? And this swift fall off is actually quite quick, all right? And, all right, nothing is going to stop it until you reach this 200-day moving average. All right, so we're coming close to it. All right, that's about 3,920. All right, we are just about another 30 points away. So don't be surprised if by market close today, we actually hit that line. Yeah, okay, now that will be pretty much the line that's going to hold the market firm, all right, before we probably get a little bit of a bounce, all right, and then decide if we're going to have another sell-off. All right, but as of right now, all right, there is negativism, all right, or negativity, right, in the market right now. So, right, there's a number that came out today, and the number is once again red hot. All right, now, so why is a good number actually bad for the market? Simple, right? Because, right, the economy is still hot and growing right now, which means that the Fed has no choice but to take a tougher stance, right, when it comes to their next meeting, all right, and how they're going to hike the interest rates, right? So that means money is going to get even more expensive, right? And that's not good. That's not what people want to hear, all right? Now, so with that, all right, let's get to our portfolio, all right, because I've still got some way to go, all right? So do I have some stocks in mind, right, that I want to add to my current portfolio, right, so that I can continue building cash flow? I do, yeah. All right, now, so with that, let's go. All right, it's a blood sea of red. All right, it's a blood sea of red, but am I panicking over here? Actually, I'm not. Yeah, all right, now, so our first stock position as a weekly goes, all right, it's WBA. All right, now, so if we were to look at our stock position, right, this stock has relatively gone nowhere, right? So we're not going to sell any call options on it right now to generate additional income, right? Because it's not the best probability, or it's not the best time, right, to actually do this, right? Now, next, Intel. All right, now, so Intel is another long stock holding positions that I have. All right, so it's again fallen off the cliff. All right, now it's hit the support level. Is it going to bounce? We'll see. All right, we'll see. All right, but definitely with this sell-off, I'm not going to sell a covered call right now. All right, so I'm just going to hold on to the stock position. All right, our next one over here is Verizon. All right, I own the stock at $50 over here. All right, and Verizon right now is trading at 38. All right, now, so it's just come off the cliff as well. So I'm not going to sell any call options. All right, I'm just going to hold on to it. All right, so not much actions, it seems, with our stock. All right, I have Tyson Foods, right, at 77.50. All right, and the stock is languishing at 61. All right, it had a gap down on its earnings. All right, but now it's stabilizing and coming back up. All right, now, so no action so far. All right, and I'll probably think about selling a call option if it covers up this gap. Yeah, all right, that means if it comes back to around 63.50, all right, I'll consider selling call options to generate some income. All right, otherwise, I won't be looking too much to do. All right, now HBI, all right, at $9. All right, now it's sitting at 5.30. All right, that's it. Just hang on to it. Yeah, all right, now, so the market is heading lower for this stock, right? But we start to see some form of a possible divergence on the RSI. All right, so let's see how it wants to play out. All right. Right now, so these are the stock positions that I'm stuck, all right, on my portfolio. Oh, there's one more, all right, from last week, right, which is Pfizer. All right, so I'm also delivered Pfizer at 47.50. All right, so Pfizer is right now at 41.60. All right, it's right at the support level. All right, now, so if you look at things right now, we are potentially setting up for a double bottom. So if we can catch a bounce off here on Pfizer, all right, that would actually be pretty bullish. All right, now, so again, I can't predict what Mr. Market wants, so I will react accordingly. But now, as you see the picture, you're definitely not going to sell any call options on this stock. All right, so all our stock position stays as a stock position. All right, so no action required. All right, now, let's move on to our portfolio puts. All right, I have a 3M 17 March portfolio puts at 110. All right, so 3M is now trading at 107. All right, so it has followed the market sell-off. It's come off a little bit. Am I panicking? Not really, because the stock is trading at its support level as well. All right, so many of these stocks, right, are starting to hit their support levels, right, amidst the sell-off. All right, am I really panicking? Not really. All right, because I know that my portfolio is more than capable, right, of owning every single share I'm trading right now, if I need to. All right, if I need to. All right, okay, now, so no actions. All right, we'll wait and see. All right, so some new positions that I took last week. All right, Google. All right, I sold a $90 put. All right, and of course, tech has fallen off together in the market, and Google has fallen. All right, it's fallen again today. All right, so what am I gonna do? All right, on the hindsight, all right, now I did feel, and I did say in my session last week, I'm a little bit early. So be it. All right, so sometimes, all right, while driving for your target, all right, okay, you actually end up getting caught in discount situations. This is why, right, you have to be very, very clear, right, that when you want to build a portfolio as an option seller, right, never ever put yourself, right, on too much of a leverage. All right, why? Because eventually, all right, if disaster hits, right, and you are ever required to pick up many of these shares, yeah, okay, you need to know that your capital and your account, right, has the full ability, right, to pay out for them. All right, okay, now, and not run into trouble. All right, so am I worried about Google? Not really, because I think the prices are still, all right, okay, pretty cheap right now, right? And if the market does hit the 200-day moving average and bounce, right, we should see the bounce of Google as well, right? So that's how it's supposed to play out. Is it going to be 100% this way? I don't know, right? So we'll see. Yeah, right. It's not the first time that it's happened to us, right, over the last 11 months, right? So we'll see how this one, right, or this time, how the market wants to play out, right? So that's our position. And then we had Micron as well, right? So we saw the Micron $55 put option last week, right? And Micron, right, has fallen, right? But this one, right, is still in the safe zone, right? So it's at 57.50, right, which means that the trade is still safe at this moment. All right, now, so am I going to change my stance of how I generate my cash flow? And the answer is no. All right, why? Right, because unless you're telling me, right, that very golden rule, right, of the stock market success of buying low and selling high, right, of good, strong quality companies, right, does not work, right, then I'll probably change my stance, right? But the last time I checked, right, this is an HO rule, right, that has always worked out, right? But the one guarantee it cannot give you, right, is the timing of it. Can you see where I'm heading? All right, now, so right now, it seems like the timing of, what I'm doing, right, doesn't seem to benefit me, right? But I know what I'm doing, which means, right, it's eventually going to come back, right? So my job is to make sure that I'm still comfortable, right, with the fundamentals of these companies that I'm trading or actually holding on to right now. Yeah. All right, now, so Micron, I'm still comfortable with it. All right, let's move on. Right, and then we have AT&T, which was also added on last week. So this was an $18 put option as well. All right, and AT&T is fine. Yeah, all right. Now this is one of this, kind of like most boring, all right, or stable companies that you can see. All right, it's just trading up and down within the $1 range, and it's absolutely doing nothing. It's going nowhere. Yeah, all right, it's really going nowhere. All right, now, so this is probably one of the stocks that's performing out of our portfolio right now. Right, and as it stands, right, I'm not saying it's going to happen. As it stands, right, okay, there are probably two more stocks right now, right, that I may have to end up, right, paying a full amount for it, right, on March expiry. Right, I don't know, right, but that leaves to be seen. Right, is it going to stop me from continuously adding more to the portfolio? No. Right, in fact, I'm going to add more to the portfolio today. Why? Because I've again, right, found, right, crazy deep undervalued stocks which the market is ignoring. Yeah, okay, now so let's get to them. Right, so today I'm gonna try to get this across the $1,000 mark, right? And as of right now, my total account position, right, requires about $135,430, right, in requirements. Right, my account right now, right, adding on all the cash flow we've collected, right, is set at about $123,000. Right, now, so that means, right, that my account, right, is now over leveraged by about 10%. Right, I'm utilizing about 110% of my account capital. Yeah, all right, now, so if you realize and you understand how margin trading works, right, when any of these positions in options are converted to stocks, which means, right, any of these portfolio puts, if I sold them, right, and I'm assigned the stock itself, right, I actually am entitled to a 50% margin. Right, which means the broker is willing to lend me up to 50% of the cost of the shares. Right, so although my portfolio is worth $123,000, but when it comes to stock ownerships, right, I actually have the capital of up to $246,000 to own stocks. Now, of course, I'm not going to use all of them. That's ridiculous, right? Because half of those amounts is not my money, right? But if I can use some of them without running myself into trouble, right, then, right, I'm actually utilizing the concept of other people's money to my advantage. Right, so how do I keep it safe? That, of course, comes from year-long experience, right, over the last decade, which I've been trading and building a portfolio like this. Right, so that's what I'm trying to show to you over here, right, in our Facebook Live sessions that we're doing together. Yeah, right now. So hopefully you can pick up, a trick or two over here or there somewhere. Right, or if you really find that you need some guidance, you like what I'm doing, you need some guidance, you want to do this with a much smaller portfolio, then, all right, by all means, all right, seek out some of the mentorship programs that we have available, all right, and then see what suits you. Yeah, all right, now, so without further ado, all right, the first stock that I want to add on to the portfolio today, all right, is Devon. All right, I want to add an oil stock, ladies and gentlemen. The chart looks absolutely ugly. All right, but when the chart looks absolutely ugly, all right, okay, I'm in for it. Why? All right, number one, this is an oil company. Right, number two, oil prices are high right now. Number three, when oil prices are high, it produces big profits for oil companies. All right, now, so next step is, do we think that the current economic conditions is going to continue keeping oil prices high? And the answer is yes. All right, now, so if oil prices are kept at their current range, it doesn't even need to be the highest point, right? Within their range, which is on the higher end, these oil companies are going to continue producing outsized profit numbers. All right, and if you look at this number over here, all right, okay, we have this company, all right, in the last 4 quarters, right, in the last 4 quarters, right, generating a total of 166, 288, 259, and 148. So if I add the first and the last quarter together, that works out to about $3. All right, and these 2 quarters added up together comes up to more than $5. Do you see that? So this company is making almost $8.50, right, in a year, right? And that's going to put this stock's, right, PE ratio at 5.94. Right, that's ridiculous. Right, you are buying a company that can well afford its dividends. All right, okay, and there's no issues to it because it's at its greatest profit zone right now. Right, so there's not going to be any cash flow problems because oil prices are high. Right, and the market is ignoring, right, their profitability. The market is pricing this company at less than 6 times earnings. All right, I'm going for it. All right, why? Because, right, when market hates a company, right, and when a company is doing well and yet the market hates it, right, that's when, right, they have run out of sellers. Can you see where I'm going? Does this company make money? They do. Right? Why are people panicking? Why are people running away? Those are your short-term traders. Those are the people, right, who never wanted to own this stock. They just wanted to trade it, right, to make some money, and they felt that they're wrong. Right? So all that is left right now in this stock are investors. Right now, and when the things get better, or when the outlook on this company gets better, right, what do you think everyone's going to do? They're going to rush into it, right? And all it takes is a quick little rush, right, for the stock to start challenging, right, its high over here. Yeah, all right. I don't even need it to get there, right? I just don't need it to fall any further, all right? So it doesn't matter to me, all right? Now, so let's go ahead, all right? I'm going to take the trade over here, right, in, right, with 17 March just 3 weeks away, right? Let me try, right, to double up right now, which means, right, instead of capturing just cash flow for this month, right, I'm actually going to go ahead, right, and capture 2 months cash flow, right, okay, which is something that I've done regularly, right? Now, so I'm going to capture this one, the 50 strike over here, right? Now, so I'm going to add the 50 strike for, I can get about roughly 180, right? So let's go put that up. All right, so I'm going to trade 4 options of this Devon $50 puts for April. Oh, market prices have come down. So let's see if I can get 178. Ah, man. I'm slow. Oh, well, I'm just going to take it. All right, ladies and gentlemen, I got my first trade off over here, all right, and I just did a Devon Energy, April $50 puts. I sold 4 of these options at 176. Now, so this is the trade tab, this is the timestamp, so I just got this trade over, right, on this portfolio account. All right, now, so let's recognize that cash flow over here. All right, so this is going to be trade number 67. All right, for our portfolio, I sold 4 options of Devon Energy, right, and this is for 21st of April, right, $50 strike. All right, we're doing this on the 24th of Feb, right, and we collected 176. Right now, so I'm generating about $704 in cash flow, right, but I cannot recognize all of this cash flow for the month of March because this option only expires in April. So I can only recognize half of that amount. All right, so the other half of that amount, right, will have to go, right, into our April trade setup, right? So all I'm going to do is I'm going to copy this, right, and do a double entry, all right? So half the cash flow recognized in the first month, half the cash flow recognized in the second month itself. Yeah. All right. Now, so I'm going to go further now. Right, to make sure I got the calculations right. Right, my cash flow is only for this range. All right, so I'm now at $1,192. All right, okay, so we've crossed the $1,000 mark. All right, and I'm not done yet. All right, why? Because Devon is not the only cheap oil stock. I'm going to add a second oil stock today to this portfolio. All right, so this portfolio has a lot of telecommunication stocks which are defensive. Right, I have some technology stocks which are undervalued. Right, so that's okay. I have some. What other stocks do I have? Right, I have Walgreen Boots. I have Tyson, which are consumer kind of staples. Right, they are not too volatile, which we have 3M as well. So I think we're pretty mixed up. So I can afford, right, to take up two oil positions. So the next one that I have over here is APA. All right, so it's APA Cooperation. All right, okay, APA Cooperation. Now, it's another oil company, right? I want to point you towards this, right? This is how ridiculous, right, the market gets, right, when it gets fearful. All right, now, so if you look at things over here, right, this stock was punished, right, despite its earnings announcement yesterday. And look at its earnings announcement, right? It blew away the estimates, right? And yet, right, the stock has been punished downwards. All right. So this company is not rewarded for doing well. How ridiculous is that? All right. And just like what I said earlier, yeah. All right. Okay. Just like what I said earlier. All right. Now oil is doing well. So oil prices are going to stay high. All right. Now, so this company right now, right, is trading roughly at about 4 PE. And let me show you why I like this. Right. If we do some simple fundamental understanding. All right. Now over here, you have this company called Apache, right? Right, which does a return on assets at 10%. All right, you see the number 10 over there. That's telling you, right, that this company is returning on all its assets at a 10% rate. Right, and this company now is only trading at a 4 PE. All right, so this stock price that you're seeing can easily double, right? And despite doubling in the price, it's only reached fair value. Can you see where I'm going? So this stock can potentially hit $70. Right? And $70 is only considered fair value. All right. Okay, now, so I like this severe undervaluation over here. All right. So I don't see a problem because oil is doing well. All right. Oil is going to stay strong. All right. So this company's earnings, right, it's going absolutely crazy. Yeah. All right. So I'm going to take advantage of this current market situation, right, where the market sold it off. All right. Okay. Nobody wants to come in, but that's also when, right, you have the inefficiency. All right. Remember, you know what one of the greatest investors said? Right, be fearful when other people are greedy, but in this case, it's the total flip side. Right, we need to start being greedy, right, when all the others are actually fearful because it makes sense. Yeah, right now. So for this trade, right, I have a stock over here. The low is about 37.24. Let's see what I can get. So similar, I'm going to do a 2 months over here. 37.24 means I can probably take a 37.50. All right, I think that's good enough. All right, so I think I can sell 3 of these. Three of 37.50. Let's see if I can get it. All right, I'm done. All right, so I sold 3 of the 21st April 37.50 portfolio puts. I sold 3 for 235. All right, so I'm done over here. So let's go ahead and record that down. All right, so I have Devon, all right, and then trade number 68. All right, it's going to be Apache. All right, I did 3. 21st April as well, 37.50. 24th to 35. So, wow, is that weird or what? Really? Wow, interesting. All right, the cash flow is exactly the same. All right, $352.50. All right, now so now my portfolio is up to $1,550 for this month, ladies and gentlemen. All right, I'm not too far away. All right, I'm about another 1/4 of the way away. I'm about 500 US dollars, and I've got 3 more weeks to go. So next week, right, next Friday, right, let's see how I'm going to add another $500 to this month, right, to hit our target for the 11th month in a row, right? So after these two positions right now, right, my portfolio, hang on, I need to erase this, right, because it's a double entry, right? So my portfolio right now is utilizing about 128%, right? So I'm not still too stretched because I did say, right, I'm okay to go all the way up to about 130%, right? So I'm coming close to it, right? And I'm still there, all right? 128% overloading, all right? So I'm good with that, all right? So with that, all right, I'm done with whatever I want to add to the portfolio today. All right, and based on this, all right, we are now trading at $1,544 for this month's cash flow. All right, let's go hit out to all of you. All right, so if any of you have one or two questions for me, I'm more than happy to take them. So you can start posting them in your comments. All right, and I'll be happy to look into them and answer them. All right, so Andy is saying, hey, Terence, it's coming to spring. All right, so can it? How can it be that oil prices are going higher? Andy, you're mistaken what I said over here. All right, now I said that as long as oil prices stay high. All right, now so if you look at crude over here. All right, can you see where we're going? All right, all I'm saying is as long as oil prices trade between this $70 right to $80 range, all right, okay, these oil companies are still going to make very, very good profits. Yeah, okay, and I don't see breaking. Why? All right, simple. All right, we still have all those Russian oil supply problems. All right, we still have, all right, the inflation that's going on right now, which is going to keep commodity prices high. All right, and those are your issues. Yeah, okay. All right, now, Eileen. All right, so Eileen is bringing out, hey, Terence, all right, Intel has a fundamental change, right? It's not earning good results for many quarters right now, and it's just announced a dividend cut. All right, I agree. All right, but all right, at times, all right, when you're investing in a company, all right, one of the simple, get out factor, all right, is when a company cuts its dividend, right? But second, right, if you are actually willing to look deeper into this company itself, right, then you may actually be able to understand, right, why they're actually taking such an action, right? So, if I have to justify it to you, this is how I'll say, right? Okay, Intel, right, has just launched, right, many new plants, which means it's built a new plant, right, in quite a couple of places, right, and that involve quite hefty cash flow, right? And because interest rates are going up right now, so what Intel is doing is instead of taking new loans, right, to pay for these developments, which are basically setting up the company for longer term profits, right? New factory for new manufacturing technologies, right? Setting up sales, right? And revenues for further quarters is long term, right? Okay, but instead of borrowing at higher interest rates, right, the company is trying to seek internal resources on how they can fund this, right? So they're not really facing any cash flow issues, right? It's just a financial stance that they've done. All right, now have they done it before? Actually, they have. They did this 10 years ago, right? When they were saving capital to fight off, right, this company called ARM. All right, they did it once, right? And then after I think 1 or 2 years, right, they resumed the dividend hike again. All right, and it's continued doing this for the last 10 years, right? And unfortunately, right, it's doing it again. Yeah, all right, it's doing it again. Right, so I don't see Intel facing, right, a real structural problem. Right, I'm just seeing it, right, as a way of trying to save cash flow, right, for longer term use. Right, so for now, what I'm saying is I'm staying put. All right, okay, I'm staying put. Yeah. All right, now, so EL, all right, welcome back. All right, you're always trying to sell puts on Fridays to gain 2 extra days of time decay over the weekend, and also Friday tends to be the day when investors sell off their stocks to avoid risk over the weekend, and stock prices tend to fall. Not really, right? If you're trying to decide to trade on a certain day, right, or you're trying to make it a habit to trade only on a certain day because you think it's advantageous to you, I'm going to tell you this: it doesn't work like that. All right, now the reason why I say it doesn't work like that is because, right, yes, you may be thinking that, hey, Terence, I'm gaining 2 days in time value, but you're ignoring the fact, right, that, a stock, if you pick it wrongly, yeah, okay, it can still go against you totally in a day itself. It doesn't take 2 days for them to kill you. All right, okay, so always emphasize and always focus, right, on the reasons behind the trade. right? Okay, don't try to cut these corners by thinking, oh, Terence, if I pick a Friday, I can save, I can eke out 2 more days of time decay. Forget it. Yeah, okay, get your fundamental reasons right first, right? Because, if you have a stock that has reached severe undervaluation, right, on a Monday, on a Tuesday, on a Wednesday, are you telling me you don't want to take a trade? You're going to wait until Friday? Right? What if from Monday to Friday, the stock actually bounces back up? Yeah. All right. Now, so it's not exactly, a trading plan on its own. Right. Okay. But I would say, hey, Terence, because I'm only available on Friday, so that's where I'm going to hunt, then yes. All right. Okay. Because that's your habit. Right. And that's, your availability. Right. Okay. But don't do it because you think, right, that it's going to serve you well. Right. Because from experience, I'm going to tell you this, is you don't need this practice, right? It doesn't add any strength, right, to the trading profits in terms of this portfolio, right? If you're trying to ask, right, if this is something I'll do, I won't. Yeah. Okay. All right. Now, thanks, EL, for your question. All right, so while I'll probably wait for one more. I can take one more question before I close the Facebook live session today. Right, but for the rest of you, right, if you can actually help me hit the like button, yeah, all right, as usual, all right, we are really, right, coming down on those likes. Yeah, all right, okay, so it's bearing down on me, ladies and gentlemen. All right, okay, so go ahead and hit those likes for all of you who are actually in the session live, all right, and listening to me. Right? Because it really doesn't harm you. It really doesn't cost you as well, right? But what it does in return, right, is actually helps us, right, get higher on the Facebook algorithms and how it reaches out to people. Yeah. Okay. So if you do agree that my information over here can help you, right, that means it can help many others who are looking about the stock market and investing and building money for themselves. Right. So let this information reach them as well, and then let them judge and decide if this is something they want to follow. Yeah. All right. If it is something you want to reach out to your friends and network, all right, then also please help me hit the share button. Yeah. All right. I'll be really thankful for that. All right. Thank you very much. No questions? Wow. I'm going to do a quick countdown. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right. Now, so if that's the case, thank you very much. Hoi, right? Just right on time. Thank you very much for joining me in this week's Facebook Live session. All right. We'll come back again next Friday. Let's see what the market wants to continue throwing at me next Friday. All right. And how can we reach closer towards our goal for $2,000 in the month of March 2023. All right. So I wish all of you a great weekend ahead. All right. Enjoy your weekend, and I'll be back with you 1 week from now. Okay, ladies and gentlemen. All right, bye-bye. This is I'm Possible Terence signing off for this week. All right, see you soon.